where does Bessent think the Federal Reserve has gone too far?
This is from the Federal Reserve. This is their chart. Now, Brian Westbury, the economist, a famed economist of First Trust, who we quote often here, this is his handwriting on the chart. And he was the one that put this out on X or Twitter. And look, if the Fed can control interest rates when interest rates are low, we would basically have inflation. If you lower interest rates according to them and you hold them down artificially low, then inflation takes off. Well, as you can see on the chart, we went about 7-8 years with 0% interest rates, basically. There's no inflation. We had 0 interest rates again after COVID hit, and we had massive inflation. What is the difference? Well, they printed money, right? It's money supply.
Okay.
So what Scott Bessent is complaining about is they're trying to manipulate the public with this idea that they're mandating inflation when that is not what they're supposed to do. They're supposed to help the economy grow, which means making interest rates easier, money looser when you want to accelerate growth. Well, we are not growing in leaps and bounds, but unemployment is down. Therefore, by their mandate, they should be lowering interest rates, right? And
so you're saying these interest rate decisions have been more, shall we say, political rather than economic?
And the reality is they can't control the economy. They control short-term interest rates, which does have some ancillary effects on the economy. But if they are data dependent, which they keep saying in speeches, well, then you would lower interest rates based on the data and based on what you did by precedent last September, cutting 50 basis points when inflation was 45% higher than it is today.